So industrial all risk insurance policy is given to those corporates whose sum insured requirement is more than 50 crores. This IR policy is not applicable for any other small and medium enterprises or corporate whose sum insured is not up to the or not more than the limit of 50 crore, because this is one policy which is exclusively meant for corporate. Now let us understand what is the eligibility. The first one is 50 crore sum insured. Second is, this can be proposed for petro risk, but normally the companies do not provide it, except some PSUs. Secondly, two insured or two or more units in a complex may be eligible individually for IR if qualified individually. Here the word individually is underlined because this is referring that if a single unit is having the sum insured of more than 50 crore, then only that unit is eligible to take this policy. Now policy have two major sections. One is material damage section and second is business interruption section. So this business interruption, or you can say the consequential loss, or you can say the loss of profit insurance. So this is taken on many different bases, like turnover basis, output basis, alternate basis. These bases are adopted by the units according to their nature of business, where the turnover is applicable, where is output is applicable, and where is alternate business is applicable. So this business interruption section is inbuilt. It is not extra. No extra premium is required for that. This is part of the policy. So in this policy, the basic cover in its widest form will include first standard fire and special peril policy, then burglary, then machinery breakdown, then electrical appliances policy, and then business interruption policy. So they are the inbuilt part of the policies. They are included in the policy. Nothing extra is required for them. Then MLOP is optional. MLOP stands for the machinery loss of profit. The included part is business interruption that relates to the fire and special peril. When you call it FLOP, then it becomes the business interruption for fire. But when you call it MLOP, that means machinery loss of profit insurance. So this is optional, but if it is taken, can be given with the CPM included under section 3, or under burglary. Burglary is also included. So burglary is part is already there. Machinery breakdown can include the CPM also. Now, as far as authority and sum insured is concerned, TSE rates were there since the beginning, but now those rates are not applicable because the market is price free. So any company can charge any rates. Moreover, discounts can be allowed as per the prerogative of the insurance company. But the sum insured must include stock value, and for others, the value should be on the restatement value part. Stock can differ because the market value of stock is considered only because the value of stock fluctuates. But for our other properties, the restatement value is applicable just because reinstatement value stands for the current prices at which the property can be replaced or reinstated. I repeat, for any kind of other properties like building, furniture, fixture, machinery, the reinstatement value has to be taken because it stands for the current replacement value or reinstatement value. So declaration facility for stock is there. In case decrease in sum insured is allowed. Some insured in the business interruption, at least as per the last year balance sheet, must be there. It can be less or more, but normally it should be on an average according to the last year balance sheet. Now add-on covers are also there. Say for example, offshore installation, removal of machineries beyond 60 days. Rates we are leaving apart because rates are fluctuating and rates are not standardized for any company. Professional fees as per policy rate, expediting expenses, improvement and betterment charges. So they are the add-ons available with this policy. And add-on differs company to company. Temporary repair is also there, debris removal in excess of 1%. Because the standard fire and special peril policy is applicable here, which is having only the debris removal limit of 1%. 2% limit is enhanced in the Sukshma Udyam and Laghu Udyam. Those policies are not applicable here because the IAR part consists of the standard fire and special peril policy for fire perils, which is as it is, and there is no change in that policy. Architect, engineer fees is also restricted there at 3% because in standard fire and special peril policy it is not increased. This is increased only in Sukshma Udyam and Laghu Udyam. There it has become 5%. So here it is only 3%. If any additional coverage is required, additional premium is required for that. Loss due to escape for molten materials is optional. This is not part of the policy, but of course add-on coverage is already there. Now as far as the rates are concerned, fire and allied perils are rated as per the tariff provision plus discounting as per the company's prerogative. Earthquake is charged, machineries, fire LOP, MLOP. The companies are applying their own discretions and they are charging as per their prerogatives. So whatever discount they want, they can give. But the cover, they are not interfering because the coverage is fixed as per these policies like fire, machinery, FLOP and MLOP. Then no facility for deletion of STFI and RSMD facility peril in here because in IAR this option is not given in the standard fire and special peril policy. So normally these STFI and RSMD perils are not deleted. Compulsory deductibles are higher as compared to the fire policy because here compulsory deductibles differ section to section. Material damage section 5% of the claim amount, FLOP 3 days of gross profit, MLOP as per TSC. So these compulsory deductibles are obviously higher for material damage as well as business interruption, and the percentage is decided. Then voluntary deductible provision is also there. Voluntary deductibles can be opted by the insured according to the provisions of the sections. Here the insured becomes entitled to get the higher discount on the premium. Then certain clauses are there, which clauses are specific and optional, but available only on the requirement of the insured, because these clauses are similar as applicable to the fire insurance policies. For example, agreed bank clause, architect engineering fees clause, designation of property, escalation clause, omission to insure, temporary removal of stock. This designation of property here means if any particular machinery or property is taken in a specific section, in that case that claim or that loss will be dealt with according to that section only. Maybe that is part of another section, but then the designation will not be changed. It will remain the same whatever is covered under the policy, so that designation remains fixed. Additional clauses like local authority clause, startup clause, contract price clause, declaration clause, auditors clause, new business clause, solicitor professional fees clause. These clauses I am reading out just because the fire insurance policy is having many clauses. Many clauses means number of clauses are applicable, but as per the selection of the insured. For certain clauses, premium is chargeable, and others are as per the requirement of the insured. But here, these clauses are not part of the inbuilt policy or inbuilt coverage of the policy. Say, for example, local authority clause is inbuilt part of Sukshma Udyam and Laghu Udyam, but this is not inbuilt part of the standard fire and special peril policy. And here in industrial knowledge policy, standard fire and special peril policy is included. So that has to be opted by the insured, then only it is given. No escalation or omission to insure clause and removal of stock property as an add-on cover. Certain clauses, certain companies are not providing. Then certain other add-on covers are there for business interruption and property insurance. Means the consequential loss policy or the loss of profit policy or the business interruption insurance policy is also having certain add-on covers. These add-on covers are available only on payment of extra premium. As far as add-on covers are concerned, you are knowing 4 basic points about the add-on covers. First thing, this is not part of the inbuilt coverage. It means this is an additional risk. Since this is an additional risk, extra premium is charged for that. Second thing, add-on cover is always optional, voluntary, as per the requirement of the insured. If the insured want, insured can select. If they don't want, they can ignore all of them. Third, add-on covers differs company to company. Add-on covers are not similar of all companies. Policies could be similar because policies, most of the policies are tariffed policies. Most of the policies are having their terms, conditions, wordings and clauses standardized. Most of the policies are having the verdicts of courts. On that basis, the verdicts are decided. So policies could be similar almost in all the companies. General insurance companies, you can say. For example, motor, fire, engineering. These policies are normally same. You will find only the introductory clause different because the name, addresses of companies are different. As far as operational clause is concerned, they are almost same. But the differentiation is on the part of the add-on covers, differentiation is on the part of the pricing. Because pricing differs company to company, there is no standard tariff rate. Wordings and terms, conditions of add-on covers differs company to company because companies have designed these add-on covers of their own and they have got the approval from the IRDA. Then only they are selling this add-on cover. These add-on covers becomes the part of the policy if selected by the insured, and if there is any loss due to the risk covered under the add-on cover, that risk is paid. So not only fire insurance is having the add-on covers. Here for this business interruption policy, these add-on covers are available like contingent BI, auditor's fee, FOE's extension, failure of electricity, failure of gas, failure of water. These FOEs are there. Options for gross profit, debt services, increased cost of working, suppliers and customer extension, interruption by civil authority, ingress, egress, इसको छोड़ दीजिए, this is not applicable here. All the above covers to be decided by TSE, but now since TSE is no more there, so they are now applicable and they are provided as per the company's discussions. Certain risks are excluded from the IR policy because IR policy becomes very wide because of the combination of certain different sections which includes fire, burglary, machinery breakdown, business interruption, electrical equipment. So the coverage differs section to section. Similarly, exclusions differs section to section. But certain common exclusions are also there for the policy, like faulty, defective design, material of workmanship, wear and tear. This workmanship is related to the karigari. Defective designing, normally it happens. So because of that, the structure has to be removed. There comes the removal of debris and additional expenditure. Here that add-on cover is applicable. In interruption of water, gas, electricity, etc. means they are all failure. Because of that, the restoration of the business unit cannot be done. Collapse, cracking of building, corrosion, evaporation, contamination, color changes, ये जंग लगना, घिस जाना और ये सब चीज़ें ये किसी भी पॉलिसी में कवर नहीं होती. लार्सनी मीन्स छुटपुट चोरी. जैसे कोई एक पैकेज है, वन कंप्लीट पैकेज ऑफ द items, out of that certain part is removed, taken and stolen. That is called larceny. Larceny, fraud, unexplained shortage, coastal or river erosion, normal settlement, bedding down of structure, willful act, negligence, and cessation of work. ठहरा, रोक दिया गया काम. That cessation of work is not covered. Additionally, damages by war, civil commotions, permanent or temporary dispositions, nuclear material, then deliberate and sustained operations, freezing, solidification or inadvertent escape. Exclusion list is very long, no doubt. But these are all applicable and they are defined and they are given along with the policy so that there should not be any confusion to the insured. At a later stage, when there is a loss of damage to the any particular section and when the claim is filed, those exclusions must be clearly visible. Say for example here, exclusions for machinery breakdown and property insurance. So machinery breakdown section has got its own exclusions. In addition to the fire, in addition to the business interruption, in addition to the burglary policy. Because all policies are having their own exclusion clauses. Here in machinery breakdown clause, defects known to insured but not to the company are not covered. Testing or overload beyond safe limits, not covered. Loss for which supplier or manufacturer or repairer is responsible is not covered. Loss to foundation, refractory lining, exchangeable tools, not covered. Liability assumed by insured and property undergoing is also not covered. So they are the specific exclusions. Then there are certain excluded properties. If these properties are there in the firm, insured firm, and there is any loss because of any reason, still the losses to these properties is not covered. And these could be money, bond, security, work of art, goods held in trust. This goods held in trust may confuse you because there is a change in the Sukshma Udyam and Laghu Udyam policy where the goods held in trust is covered as inbuilt peril. But since this is not covered in standard par and special peril policy, that is a part of this IR policy, so this is excluded. Goods held in trust. Then vehicles licensed for road, rail, locomotive, watercraft, aircraft, spacecraft. are not part of the properties insured under this policy. Property in transit are not covered, property in course of construction or erection are not covered, land, rail, road, dams are not covered, livestock not covered, property undergoing alteration repairs, more specifically insured, property insured by marine policies are not covered. Then comes the general conditions of the policy. Here, certain specific conditions are imposed. The disclosure of all material facts should be there from the insured side, because this is a big risk policy where the huge amount is involved. So insured should not conceal any fact. This is a contract of utmost good faith. In the proposal form, it is the duty of the insured to disclose all material facts. Material facts are those facts which are impacting the rate and acceptance of the proposal. So if there is a concealment of those facts, then the insurance company has got the right to decline the proposal or cancel the policy. After 7 days of false displacement is a clause applicable to particular section. Business altered, if there is a business altered, then the company will not be at risk. Occupied for more than 30 days, unoccupied. This is a clause in fire policy that if any building or any portion of any firm remain unoccupied for more than 30 days, then the loss is not covered under the fire policy. So that clause is also applicable here. If the insured firm is not occupied for more than 30 days and there is any loss or damage or burglary or stolen theft, that will not be covered. Interest transferred other than by law. Termination of contract, duties after claim, no liability after 12 months of rejection of claim unless it's subject matter of court of law or rights of company after a loss. These conditions will transfer the liability to the insured himself, and company will not take the responsibility to pay the claim. Similarly, in cases of fraud, false declaration, company's option to reinstate, there has to be clarity, because conditions specifies contributions, obligation, arbitration. They are already there. Condition of average is also there, because fire policy and machinery background policy are there. So the principle of under insurance will apply, and there the average clause will also be applicable. Now, what should be the basis of claim settlement for this policy? That's important, because claim settlement is there on two bases. If there is a total loss to any particular part, then the replacement by a property to a condition equal to but not better than new has to be paid. Means insurance company is liable to replace or restate the property in the same manner which it was having immediately before the loss, but it should not be better than the previous one. In case of partial loss, the restoration of property to a condition equal to but not better than new. In case of partial loss, of course, the complete replacement is not there, complete restatement is not there, but restoration of property is there. That means if repair is required, repair to be carried out. If certain replacement, certain portion or part of the replacement is required, in that case replacement is done. So loss is partial, means it's a not complete loss, it's not a total loss, no total replacement or restatement is required. Restatement has to be done within 12 months, liability is not more than within sum insured for partial loss, and payment on depreciation basis unless reinstated. So here in case of partial loss, the depreciation basis will apply. As far as claim of machinery breakdown is concerned, the claim settlement would be as per the provisions of the machinery breakdown policy. There again the same two conditions are applicable, that if there is a total loss or if there is a partial loss. So in case the claim is there, the policy will settle the claim on the basis of the current replacement value, because the policy has been issued on the basis of the restatement value. So here, whatever is the purchase price, whatever is the books price, whatever is the depreciated value, that has to be forgotten. What is the current replacement value that will be paid by the insurance company in case of total loss? And what is the current cost of repair that will be paid by the insurance company in case of partial loss without depreciation except for wear and tear? In addition, debris removal is payable up to 1% of the claim, and architect and engineering fees payable up to 3%. Here it is not 2% and 5%, which is revised in Sukshma Udyam and Laghu Udyam. So that precaution has to be taken, because this difference is because of the SFSP policy that is part of the IAR. Then comes business interruption. So in case of loss of profit policy or consequential loss of policy, there could be reduction in turnover. A reduction in turnover could be because of the any peril of the standard fire and special peril policy. That may be fire, lightning, explosions, subsidence, landslides, dust, fire, SND, whatever peril is there. 12 perils are there, in the standard fire and special peril policy. If any of them is striking and the insured firm which is doing the business, which has taken the policy, which is covered under the IR insurance, if that is registering reduction in turnover, that reduction in turnover is covered under the business interruption insurance, which is part of the IR policy, especially FLOP. So FLOP policy will pay for the reduction in turnover. Secondly, this will also pay for increase in cost of working. Now, increase in cost of working means what? Whenever there is increase in cost of working for any firm, that will ultimately reduce its gross profit. And when the gross profit is reduced, that is the loss covered under the business interruption policy. So that loss is payable after the work is restored. So whenever the claim settlement under the business interruption policy will be there, if the gross loss is there because of the increased cost in working or increased in cost of working, that would be the part of settlement, and the insurance company will pay for that. Less any sum saved during indemnity period or application of condition of average will also apply in cases of loss settlement. So when business interruption losses are settled, the most important part is the gross profit settlement would be with the formula that turnover plus closing stock minus opening stock plus working expenses. If this is the formula for gross profit, then there is no claim payable, because business interruption policy is paying for the loss of income or loss of profit during the policy period. If there is any loss of income or loss of profit due to the insured fire perils or due to the add-on covers selected under the policy, then only the claim is payable. So here, turnover is taken, closing stock is taken, opening stock is taken, working expenses are taken. And then the indemnity period selected by the insured. Because for every business interruption policy, indemnity period is selected by the insured. This indemnity period is available in multiples of 3 months, 3 months, 6 months, 9 months, 12 months, 18 months, 20 months, up to 3 years. Normally, the insurance companies are providing indemnity period up to 3 years. So, insured can select any indemnity period that indemnity period would be compared to the actual interruption period, and whatever indemnity period or interruption period, whichever is lower, the insurance company will settle the claim for that period. So indemnity period is optional, but interruption period is actual. Actual means how long the business was interrupted due to the insured peril. So both periods would be compared. Whichever is lower, insurance company will pay the claim for that period. So here, the rate of gross profit is also worked out in terms of percentage, that what is the gross profit and what is the rate of gross profit. Benefit from other premises and return of premium are also clauses which are normally not used. Then exclusions under business interruption. Under these circumstances, the business interruption policy will not pay the claim. Business interruption word I am using because this is more common in Europe. Otherwise, here in India, this is known as the FLOP or the consequential loss insurance. FLOP, maybe you are more aware with the FLOP. If you are getting confused, I will use the FLOP word because this FLOP is common. So under the FLOP policy or FLOP part of IAR policy, if there is a loss caused due to restriction imposed by public authority, if there is a loss caused by lack of sufficient capital, suspension or lapse of license, damage to boiler, electronic installation, deliberate corruption, erasure or information on corruption computer system, mechanical electrical breakdowns. Because of these reasons, if there is any loss caused under the business interruption policy, the insurance company will not pay any claim under this business interruption or FLOP section of the IAR policy. In other words, when you are studying FLOP policy, exclusive FLOP policy, there again you will find that these are the 6-7 listed losses. In these cases, the insurance company is not settling the claim because they are the exclusions of the business interruption policy or FLOP policy. So the same exclusions are applicable here also. Here again, those same exclusions of the FLOP section are applied because the loss of income or loss of profit can be caused by these all reasons. But they are specific clauses. Company does not cover them. Company will not pay because of these reasons. And these are common. Say for example, the flood has caused the loss to my unit. And the flood water was there for say 10-15 days. Due to that flood, my insured premises, which is insured for say 60 crores, got damaged, stock got damaged, machineries got damaged, the plant was shut down for almost 30 days. So due to that shutdown, there was property losses, there was loss of profit also. Now this situation was restored in 6 months because the plant was shut down and not in working operation. So after 6 months only the work was restored. So as far as material damages to the building, to the property, to the machinery, to the furniture fixtures are concerned, losses to them will be settled under the fire section of IAR policy. This industrial or list policy includes the fire section. In that fire section, standard fire and special peril policy is applicable. So under that SFSP policy, building losses, property losses, machinery losses, furniture fixture losses will be paid. Part 1 this is. Secondly, the loss to income will be paid under the business interruption or FLOP section. So, due to restriction imposed by any public authority that this plant will not be restarted now because this is throwing chemicals on the drainage system and that is causing harm to the animals and even people. So some public authority has issued such orders. Because of that, that plant cannot be restarted. Because of that, the work is disrupted and now cannot regain the operations again. So unless there is a comparison of the indemnity period and actual interruption period, the FLOP loss cannot be settled. Now say suppose indemnity period selected by the insured is 6 months. But the actual interruption period is continuing. This is not ending because the restriction is imposed by the public authority. It is not removed for 1 year or 2 years. Say after 2 years this restriction is removed. That means the actual interruption period was 2 years. Indemnity period was 6 months only. So when there is a comparison of actual indemnity period versus interruption period, obviously the indemnity period is lesser, that is 6 months only. So the FLOP claim will be paid for 6 months only. That too after the applicable clauses, compulsory deduction, etc. So only this one thing, due to restrictions imposed by public authority, the insured can suffer major losses. Or suppose by any reason, the insured does not have the sufficient capital to restart. There is no restriction at all. But if the insured himself does not have the capital to restart the business, so the business is not restored. If it is not restored, then the comparison of indemnity period and actual interruption period would not be there. Still, the claim will not be settled. So this is again exclusion of the business interruption policy. Or suppose my factory is manufacturing some two-wheelers, bikes, but the license given to me for 3 years only. When the flood strikes, flood caused the loss. When I restarted the business, by that time my license expired and the license was not renewed. So even if I am restoring the business, I cannot manufacture because my license is not renewed. So suspension or lapse of license may be one of the causes where the business can suffer the loss of profit. So if the loss of profit is caused due to suspension or lapse of license, the FLOP section will not pay any claim because this is under the exclusions of the policy. Moreover, damage to boilers, economizers, turbines, vessels in which pressure is used, if they are causing the loss under the machinery section to the unit, still the business interruption policy will not pay any claim because they are the part of the machinery breakdown. If these losses are there, if they are insured under the machinery section, machinery will pay about the cost. But if they are not insured in the machinery section, then the machinery breakdown section will not pay. Similarly, the FLOP section will also not pay. So they are all exclusions of the policy. Now, loss estimation in business interruption insurance. Loss estimation means, say suppose gross profit is only 1 lakh. Turnover is 5 lakh. Standard turnover for 3 months is only 50,000. Or actual turnover for 3 months is 10,000. It means there is a shortage in turnover of 40,000. So if you want to calculate the rate of gross profit, the formula for that is gross profit upon turnover. That is 1 lakh upon 5 lakh. That is 0.2%. Now how the loss will be worked out? Serial number 6 into serial number 5. That is 0.2 into actual shortage in turnover is 40,000. So 0.2 of 40,000 means 8,000. This is loss estimation in business interruption. So the more focus under the IR policy is on the material damage and FLOP section. Because when the machinery damages are there, normal cases, the machinery breakdown policy is settling the claim on the basis of the current replacement value, that is the reinstatement value. Of course, under insurance is there, then the average clause will apply. If there is no under insurance, no policy clause will apply except the compulsory excess. If there is a loss due to burglary, claim settlement is simple because burglary is a normal policy. If there is any theft, that is not covered under the burglary. If there is any forcible entry, then the loss is payable under the burglary insurance. Forcible entry is a crime. So insured has to register an FIR also because the forcible entry was there, maybe by breaking the doors, by breaking the window, breaking the locks, or even at the gun point or knife point. That is called burglary. When the weapon or any force is used to steal the goods or to take the goods, machinery or property into unauthorized manner, that is a part of the burglary insurance. So that burglary claim will be settled in a simple manner for the actual amount of loss as reported in the police FIR. So that procedure is simple, there is no complication. Similarly, if there is a fire loss, if the fire loss is caused by the insured peril, the loss is within the purview of the policy. If the fire policy is paying, it means IRAR policy is also paying. If the fire claim is settled, it means the FLOP claim is also payable. So there is a correlation between these sections. MLOP section is optional. Normally insurance companies are not providing the MLOP section. But certain companies can also provide, because the corporates, when requiring these policies, they always go for the wider coverage. And wider coverage is available in certain add-on covers in addition to the inbuilt covers. So not only the fire, burglary, machinery breakdown or business interruptions are covered, but also the MLOP can be covered. So coverage under the IR policy is very wide. Sum insured requirement is more than 50 crore. Any corporate can take this policy. Policy is a compact one. This is having many sections. All these are inbuilt. In addition, add-on covers are available with certain sections. Plus, all these sections of the policy are having their exclusion list. But despite of all these factors, the claim settlement is done in accordance with the provisions of each and individual policy. If there is a fire loss, fire policy will come into the picture. If there is a loss of profit, FLOP policy will come into the picture. If there is a loss to stock, burglary policy will come into the picture. So the classifications are already there. Corporates will always prefer, they should not waste time, they should not fill up many proposal forms, they should not take individual policy for individual risk, so they prefer to take a compact policy. And IR policy is the best solution as far as the property insurance is concerned. Property insurance. If there are number of liabilities, corporate will prefer to take a CGL policy. If there are number of property risks, corporate will prefer to take IR policy. Because the risk related to the buildings, properties, furnitures, machineries, loss of profits, electronic items, they are all combinedly covered under a single policy. So this IAR is preferred by corporates as compared to the standard fire and special peril policy. Though the basic purpose of standard fire and special peril policy is to provide the coverage for more than the sum insured of 50 crores. Because now that policy cannot be issued by any general insurance company for a sum insured less than 50 crore. So that is also the favorite policy of the corporate, but only in one case, when they need to cover exclusively the fire insurance. If they also require the coverage of burglary and FLOP and MLOP and machinery victims, then their choice would be definitely industrial all risk policy. And for big industries, the industries are having the sum insured of thousands of crore of rupees. So when you are entering into the corporate, you will feel pleasure to discuss those people because how they are taking the insurance policies. And when you are dealing with a retail broking channel, you can ask your retail brokers and you can visit them with the retail brokers to the corporates. There when you are discussing the policies, so there you will find these small policies are not discussed with them like Sukshdam and Lagudam and all that. They people prefer the big coverage policies like CGL, the industrial law list. These policies are their basic requirements. They are covering and providing the coverage as per their suitability and requirements, and they can afford it. So they are paying the premium for these policies and combinedly they are taking the cover. Rather, if your company has got certain more add-on covers relating to any particular product, you can explain them. They will definitely prefer to take add-on covers because certain risks are not covered under the inbuilt part of the policies. In that case, they are not aware that you have got the add-on cover for this risk. Unless you are explaining that we have got add-on cover for this risk, we can provide and cover your risk also. Additionally, they will definitely buy the add-on covers also. See, add-on covers are always advised to give along with the policies because they are providing the enhanced coverage at a very lesser rate. But the only problem is you people are not explaining and the corporates are not aware of the available add-on covers with you. So there is a gap. Whatever is in my shop, I want to sell that. Only thing is I have to tell these are the items available with me. If I am not telling as certain items I have covered, the buyer will not come to know whether you are having this or not. So whenever there are additional add-on covers, they are always advised to discuss with the buyers or with the insured because that will provide you additional premium and to the insured additional coverage. So this is all about the IR policy. If you have any questions, you can ask me. Any doubts, any questions? Okay, please check your mail ID. Got it, sir? Anybody to confirm? Okay. Yesterday's paper also you people have got it? I think all of you must have received the paper. You can no issue, but you can submit even today. You can submit it even today. Please go ahead and continue. In fact, that 5:30 was because that technical flaw was there, and that is there is a change in that format. The company itself has done that change in the format, and the earlier icons were removed. Instead of sending, they have used the publish, and with that the certain method is also changed. So whoever has taken the Google test forms, they may be knowing, they can see now the revised format is there. Okay, continue please.